Hi, everyone, and welcome to today's webinar, Gold and Silver 101. I'm Machi Block, Senior Director at American Hartford Gold. We're the nation's largest precious metals dealer, and we've helped countless Americans to protect their retirement savings with physical, tangible gold and silver. Now, I want to give everybody a chance to kind of get settled in, let a few more people trickle in here and join the stream. But while we wait, write a comment, let me know where you're watching from. Always good to hear where you're coming from here. And then also let me know if you've bought gold and silver before, if this is your first time looking into precious metals as an investment. And then, of course, I'd love to hear if you've joined us on the webinar in the past or if this is your very first time. We've been doing these throughout the course of the year, and we really just like to keep our clients and potential clients up to speed on what's happening in the economy. So please just let me know where you're from and throw a couple of details in there about your experience, whether or not this is your first time. Now, also let me know what brings you here today. Is there something that you're seeing in the economy that has you specifically looking at precious metals? And is there something that you're hoping to learn from this webinar that you want me to cover about how gold and silver, or why gold and silver, why American Hartford Gold, of course? And then just, kind of write any other thoughts that you have. It's always helpful that we see the questions that you guys have. And as you go forward, as we go through this webinar, if you do have questions that pop up, please just leave them in the chat for us. So I see Raw, this is my first time, Washington, D.C. Josh from Arkansas, have purchased gold and silver before. Welcome, you guys. Dave Yu from California. Ophelia Scott from Michigan. New to gold and silver, but active in stocks. Fantastic. Jay Marvin. Tom, Thomas, Joe, Ramanand, and Joseph. Welcome, you guys. Appreciate you being here with us today. So it looks like we have a good amount of people kind of filtering in here. Monique, Valerie, Philip. So look, guys, again, my name is Machi Block. I'm a Senior Director at American Hartford Gold. My job here is to help people like you and me to invest into precious metals, to gain an understanding of, and to be able to make a purchase of precious metals in an economy and a climate like what we have today. So I'm really excited to take you through the essentials of owning physical precious metals and why they're really such a crucial part and a crucial cornerstone to any well-built portfolio. And that's no doubt why you're joining us here today. So in our opinion, it's more important now than ever before to own physical gold and silver as a financial safety net. And whether you're a seasoned investor or you're really just beginning your journey, our goal here today is to provide you with clear, actionable insights on how to secure your investments with gold and silver. And we do that in two ways. So the first is you can do a cash purchase, whether that be cash that you have in the bank or a brokerage account, where we ship metals right to your home, or the other side is investing through a retirement account. So obviously a lot of our clients have the vast majority of their net worth, their net worth tied up in old 401ks and IRAs. And you can actually put physical, tangible gold and silver into a retirement account and own gold and silver that way. So we're going to discuss all that and go through the ins and outs of each of those options. We're also going to discuss what's going on in the economy today, how precious metals fit into a well-rounded retirement portfolio, and then, of course, the outlook on gold and silver prices, how American Hartford Gold can help you get started easily and confidently. And if you do stick with me until the end, I'm going to share with you how you can qualify for up to $15,000 in free silver with your first investment. And it's our way of really just saying thank you for taking that first step towards securing your financial future with American Hartford Gold. So a few of the points, again, that we're going to cover as we go forward, just the overview here. What is the overall state of the economy? I think that's really important that we establish where we've been, where we're headed. We're going to talk about government debt, deficits, the state of the US dollar, perspectives, of course, on where gold and silver are headed, their current and future growth outlooks, and then how to invest into precious metals, again, whether that's through a cash investment or through a retirement account, and then why you should feel confident purchasing through American Hartford Gold. So I'm going to start out just by diving into the economy overall. So if we just take a look at an overview of what's happened this year so far, we kicked off the year with a huge bang. With Trump getting in, markets were doing amazing. Doge was tackling government spending, and inflation seemed like it was slowly coming under control with the Fed continuing to hold with their interest rates. But then the trade wars kicked off. And in April, we saw the stock market sink about 20 to 25%. We entered into bear market territory, and the bond market actually crashed along with the stock market. It's very rare that we would ever see that happen. Moody's, which is one of the largest credit rating agencies in the world, has downgraded US debt. We lost our last AAA rating. That has huge implications for the US dollar, for our debt, for our bonds, the bond market overall. And then, of course, the trade war took a bit of a pause for a couple of months. Since then, the stock market has come back with full force. It's actually doing very well. It hit new all-time highs, but so has gold. And now we're right back in that uncertainty. Markets are back to the volatility. We're starting to really see potentially the largest bubble in American history continue to grow even bigger. We're teetering on the brink of recession right now, and inflation is back on the rise. The Fed is now considering lowering rates in September, possibly caving into political pressure from the White House. And overall, it's been a very volatile and confusing year for many investors who are just trying to make sense of what to do with their portfolios. And we're all kind of wondering, where are things headed? What's the rest of the year going to look like? And while I don't have a crystal ball, I can't tell the future, I'd say that the writing is pretty clearly on the wall right now, and that we're facing unprecedented amount of risk to the US dollar and the markets. So what's actually going on in the economy and the markets today, though? That's where we've been. What are we facing right now? We actually had very strong GDP growth, but the recent data that we're seeing is actually showing very weak jobs numbers. More than half of the industries in the US are actually shedding workers right now, and that's really a telling sign that has accompanied past recessions. We had Moody's Analytics chief economist Mark Zandi came out. He said, the economy is on the precipice of recession. Not only is the labor market weakening, but consumer spending is flat while construction and manufacturing are actually shrinking, and the Federal Reserve will have a very hard time reviving growth with inflation still above its target. In fact, inflation again is on the rise. We're sitting about 2.8%, which is the highest it's been since 2024. So those Trump tariffs have kicked in and caused inflation to go back up. JP Morgan Chase came out, they added that we have consistently emphasized that a slide in labor demand of this magnitude is a recession warning signal. Firms normally maintain hiring gains through growth downshifts when they perceive that it's going to be transitory. But right now, in episodes where labor demand slides with a growth downshift, it's often a precursor to retrenchment. So basically what they're saying is, if companies think that this growth downshift in the economy is temporary, they just keep hiring right through it. But what we actually see is, as this downshift happens in growth, that labor market is sliding, the hiring has frozen, and actually jobs are not coming back online. So that's a very good indicator that companies are seeing that we're actually walking into a recession in the US. They're preparing for it. Now, when it comes to the stock market, some of Wall Street's biggest firms are warning clients to prepare for a major market pullback because they see these sky-high equity valuations right now that are slamming into the souring US economic data. The driving concern is actually expanding fallout from President Trump's trade war, including slower consumer spending, diminishing economic growth, rising unemployment, and then potentially reignited inflation, which we're just now starting to see. And many economists are expecting at least a 15% pullback and drop in the stock market before the end of 2025. So that's what we have to look forward to. That's what we're gearing up for. If we look at the dollar side of things, the whole world is walking away from the US dollar as the world reserve currency. Central banks have just been dumping US treasuries this year. Foreign investors are really losing their appetite for US debt. They're not buying our bonds and our treasuries the way that they have in the past. And the dollar has actually had the worst 6 months in 52 years. So we took the first 6 months performance of the dollar this year, and in 52 years, we have not had that bad of a showing. We're losing our purchasing power due to inflation and overall devaluation of the dollar. So there's very big concerns on that side. Now, to sum things up, and I know this isn't good news, it's not what you guys want to hear, but this is what the reality of the situation is. We're facing some very significant challenges to the economy and to US dominance and hegemony, unlike anything we've seen in the past. And that's what we're really here to talk about, is how can we look to precious metals for safety in this environment. Now, to give you guys an idea of the performance of gold and silver so far, gold is up 30% this year. Silver's up about 30% as well. Platinum has grown 35%. All of the metals have posted returns well above 20%, and they're far outperforming and outpacing traditional US assets such as stocks and bonds. So it's not every day that we have to look at gold and silver as a place to be, but when the economy is very volatile, when things are shaking up, when the dollar is losing value, that's where people tend to look to precious metals. And what we see is they're far outperforming this year, which is exactly where we want to be and why you're here, why you want to learn about gold and silver in the first place, but have that confidence that that side of the market is doing very well for a reason. So I'm going to take a really quick pause here and just tell you guys, at any point in time during this webinar, I tend to talk a lot. We're going through a lot of information. If you want to chat directly with our account executives, they're all standing by to help you on the phones right now. You can call the number. It's going to be in the chat. It's 866-607-2447. You can give us a call at any point in time. Just hop off and have a conversation specifically with our account executives about your scenario, about your questions, and they'll take you through everything that I'm kind of covering today as well. Of course, I want to have you on the webinar. I would love for you to stick around till the end, but I think it's far more important that if you start to realize that you have deep questions about this or you want to take action, give us a call. We'll get right into it with you. The other thing is, as we go along, if you have questions that pop up or something that I say kind of sparks a concern or a question in you, leave that in the message board. I do have moderators that are standing by. They're helping me kind of feed me questions periodically. So I'd love to see what you guys are thinking about, what questions you have, and we'll get into the heart of that as well. If you do have really specific questions, you might get pulled into a side chat by one of our moderators just so they can address it with you one-on-one and get into the more details of what you're actually asking about. So keep that in mind. And then anything that you write is really helpful for how we tailor these webinars in the future. We really want to make sure that these are valuable to our clients. So happy to hear what you're going through as we kind of proceed with the webinar. The last thing I'm going to say about that, as always, this is not financial advice. I do my best to give you a sense of what we're seeing in the economy, why gold and silver, what our perspectives are, but you always have to do your own research, and everybody's financial situation is different, so I can't give you specific financial advice. So with that, we'll kind of get back into it. As I mentioned, we're seeing some really crucial hinge points in the US economy, and the US dollar is the world reserve currency. And when it comes to finances, we're very aware that it's really confusing for a lot of people. Many clients are unsure about how to proceed with their investments when they're looking at their life savings, wondering, what do I do with these? And that's obviously a very big deal to you. It's a very big deal to us as well. And I did have a conversation this last weekend with an old friend of mine. He actually expressed to me that he just has no clue how to invest, and he's sitting in all cash in his bank account and didn't quite grasp that his cash is actually losing value just sitting there. And that was really insightful of a conversation for me, because it sheds light on our blind spots. For me, I've been in the financial world for the better part of my life, and I live in this news every day. I just assume that everybody kind of understands that the dollar loses value over time, and that we really need to invest to protect our life savings, but that's not always common knowledge. Or even if it is, investing can be really daunting. And so I take that to heart, and I just want to break this down simply really quick. We've got to put our money somewhere, right? Even inaction is a choice if we just leave our money in the bank, but we can put it into CDs, we can put it into stocks and equities, into bonds, into real estate, crypto, or gold and silver. But we have to do something with our money to avoid that devaluation that's taking place. But, again, many people are just kind of afraid of investing. That was very insightful to me. It's new, it's scary, it feels like risk. But what we don't realize is that risk is guaranteed if we just leave our money sitting in the dollar or dollar-based assets, because it's devaluing over time. We have to outperform inflation and devaluation. And today that risk is possibly greater than any other time in US history. And of course, we have to survey the risks on the other side of the market. What are the other investments that we can get into? What are their risks? But understanding that just staying in cash or staying exposed to the dollar is possibly the greatest risk that we can face right now with what's going on in the economy. But again, let's just look at the dollar to drive this point home. So the US dollar, it's down 11% for the first half of this year, the worst 6 months in 52 years. Nixon took us off the gold standard in 1971. The dollar has lost 97% of its purchasing power over the course of that time. So think about what $100,000 could buy you in the 70s versus what that can buy you today. And that's how you understand that devaluation. UBS, which is a major bank, they've come out and they wrote a memo to their clients and they called the dollar unattractive, and they said there's further declines expected as the economy slows. Foreign investors are beginning to ask US importers to pay with other currencies aside from the dollar. This is huge. That's never really happened before. All trade is transacted in the dollar up until this year. Now these other foreign investors and businesses and vendors, they're importing and exporting, but they're saying we want to transact in something outside of the dollar. That's a huge detriment to our worldview. 16% of central banks have decreased their holdings in the US dollar. In 2024, that number was just 11%. So the banks are starting to drop. And in fact, the US dollar is the only currency that central banks are looking to reduce their exposure to. So huge news on the dollar. On the stock side, stocks are actually doing quite well right now, but they're the most overvalued that we've seen since 1929, right before the Great Depression. Does that give us any confidence to continue dumping money into the stock market right now? The average stock in the S&P 500 is trading 530% higher than what the company is actually worth based on its book value. In 1929, that number was somewhere between 420 to 523%. So we're actually more overvalued now on book value versus stock price than right before the Great Depression. And additionally, today the S&P 500 is actually further above its long-term trend line than at any other time, again, since the late 1920s. So legendary investor John Hussman has come out. He suggested that the current stock market represents the most extreme bubble in history, with valuations, again, mirroring the extremes of 1929. So when we hear things like that, where does our confidence lie putting money into the market? Where does our confidence lie staying in the dollar? It brings up some really big and valid concerns. Bonds have traditionally been considered a safe haven investment. In fact, they're actually considered the safest investment in the world with US debt. But they're no longer that. Moody's has downgraded the US credit rating. We lost the last AAA rating. And this is a warning for us. If the dollar is losing value and investors are losing confidence in the American system, even a small shift away can cause huge damage to our portfolios. Now, the bond market started crashing back in April with the stock market coming down, and it really shows that the world has lost its appetite for US Treasuries. Typically, if the stock market's dropping, money just flows right into the bonds as a conservative play, but that didn't happen. The bond market started bleeding out, and again, it just shows us that the whole world is kind of walking back from the US dollar and considering it that safe haven place to invest. Central banks, again, have been dumping dollars and they're buying gold instead. US debt is about $37 trillion. We have a $2 trillion deficit per year, which means every year we're adding about $2 trillion to that debt, and $1 trillion is going to interest payments alone on that debt. That's actually the single biggest line item in our budget. It's bigger than defense spending, and it's bigger than Medicare. So this is huge right now. And again, it's just showing us that it's the sign that we're losing strength and confidence in the US system. If the world is watching us rack up this debt, and in the next decade, we're going to be sitting about $60 trillion of debt, what does that do to our dollar and our purchasing power, and of course, foreign confidence in the US system? So all dollar-based assets are in jeopardy right now. They must outperform devaluation. So think about 1971 when Nixon took us off the gold standard and started printing money. Again, how much value has the US dollar lost since then? Bonds can't outpace that devaluation right now, and they just can't entice investors to hold on to government debt that gets riskier and riskier by the day. So that's bonds, that's stocks, that's a dollar. Real estate, I'm not here to talk to you about every investment option, but real estate has plenty of counterparty risk. It's very complex. It's dependent on debt, banks, other individuals, and really the overall health of the economy. So we find that a lot of clients aren't really confident in that with this current environment as well. We have crypto, which is the most volatile investment out there. So when we look at that, where are you going to put your money? Now, gold and silver are actually very simple, right? They've been around for 6,000 years of recorded history as a store of value. Gold just had the best first half of a year since 1979. And I'll just list a couple of conditions which are conducive for gold and silver to grow. And as I do that, you tell me if that sounds like it's risky or a wise investment given the current climate, okay? Gold and silver, they do well in times of inflation, money printing, government debt, geopolitical conflict, currency devaluation, low interest rates, economic uncertainty, and recession. And what I would say is all of that is on the table, which is why gold and silver are the year's best performing assets when you look across the board. They're far outperforming stocks, crypto, bonds, and they're really just taking that home run right now for a reason. And this is why major banks like UBS, JP Morgan Chase, Goldman Sachs, they're all actually calling for gold to approach 4,000 and beyond just by the end of 2025. 95% of central banks have expressed that they're actually going to be adding to their gold positions this year. This is greater than any other time in history. So does that sound like a good time to be buying? We've already seen gold and silver run a bit, but we're early. We're not late at all. And what I hope to do here is really just simplify how that process actually looks and give you the confidence that if you're considering gold and silver as an investment, as a hedge to what's going on in the economy right now, we've really never seen a better time than right now to invest. And of course, you're with the right company to do that with as well. So I'm going to take a minute here and answer some questions that you guys have been putting in the chat. I do want to address all that, but again, before I jump into the questions, I just want to remind you, you can call us right now at 866-607-2447, and we can discuss all this in more detail with you, as well as your personal situation, and really get just right to the heart of it with you, which is important that we can answer your specific questions and dig into your scenario. We do have our account executives on standby waiting to help, and so feel free to call us directly right now. Go ahead and get right into it with them, and then of course we'll send a replay of the webinar to you if you miss it. But let me look at some of your questions here, and we'll just get into the meat of it. Let's see. Thomas says, confused on who has the best price for purchasing. Is bar gold better than older coins? So Thomas, it's going to be different for every investor what asset you invest into. There's bars, there's coins, there's old coins, which tend to fall under collectability. If you're a coin collector, that's a good way to go. If you're new to gold and silver, typically you're not going to be leaning on that collectability side. Bars, I would say, are primarily meant for institutional investors. They're a very specific market to themselves. Coins are really best for retail investors like you and I in most scenarios. But, if you have questions about the specific assets, I'll try to cover some of that as we go. But I would just say call that number and jump right on with one of our account executives, and they'll go through a metals consultation with you and help you better understand the options and which way you would go, right? We never expect you to become a precious metals expert overnight just with one or two conversations, but we always want to give you a really good lay of the land with investing so that you do have a sense of things as you go forward. Michael says, Mike here, lost it. Mike here, investing in gold and silver, learning about stock trading. Okay, great, Mike. Glad to have you here. Dan says, will you comment on the federal government requiring the reporting of any transaction of gold and silver over 10,000? So great question, Dan. We actually don't report anything. Every transaction with American Hartford Gold is completely private on our side. What the banks, and I think what you're referring to, is if you're pulling $10,000 out of the bank as cash, so you actually go into the bank and say, I want cash out, and it's over 10,000, they're going to require some kind of record keeping and reporting of what's this for. But if you're doing a wire transfer or a check, you're not taking physical cash out that way. The banks don't have any reportability requirements on that. We have people that wire us millions of dollars. There's no questions asked. There's no reporting on our side. Everything is kept private. So unless you're actually depositing 10,000 or more into the bank in physical cash or pulling out physical cash, it's just a private transaction. The banks don't care. They don't require any reporting on that side. Jesus says, how do you sell gold or silver if you need to convert to cash? So great question, Jesus. We actually have a buyback commitment to our clients. So at any point in time, if you want to get back into the dollar, that's just as important as getting into gold and silver for most clients, right? So we want to have that two-way marketplace. We'll always be here to buy back. You just let us know that you need to liquidate. We'll put together a buyback ticket. If the gold and silver at your home, we'll send FedEx to your home to pick that up with a shipping label. They'll bring it to us. We wire funds into your account. If that gold and silver is inside of a retirement account, we just move them out of the vault into our vault. We wire funds into your retirement account, and you can take a distribution of cash. So very straightforward. Ophelia says, how do you sell gold or silver if you need to convert to cash? So same question there. BJ says, how do we liquidate these assets? Will you buy back at spot, and how long to liquidate? So a lot of the same questions here from you guys about buying back, and I'll get into more of this as we go as well. Some assets, BJ, are going to buy back at spot, maybe below spot, depends on the market conditions. Other assets are going to buy back much greater than spot. And that's part of that metals consultation that we do with each individual client, is really figuring out what assets are best for your scenario, what are you looking for with your investments, and we'll talk to you about how they perform, how they buy back, what that actually looks like. The mints produce thousands of products. They all really fall into one of three categories, and that's what our directors are here to help you better understand when you're doing this investment. I would note that some assets are better for short-term liquidity, other assets are better for growth and preservation, and then, it depends on the market conditions as well. We're in a very strong bull run for gold and silver right now, so of course other assets are going to perform better in those conditions than if there was no demand on gold and silver. So these are all things to consider, and that's really part of that in-depth consultation. Michael says, how much gold and silver should someone have for a good hedge? It's a great question, Michael. Again, it's going to be different for everybody. Typically, in a normal environment, you would recommend about 15 to 20% of your portfolio into gold and silver as a decent hedge. But if you look at the other investment options that we ran through, you really have to ask yourself, how comfortable do I feel leaving 70, 80% of my net worth exposed to the stock market, a failing dollar, real estate in this environment, whatever it may be that you're invested into. And if you're not feeling comfortable there, then I would say that we've really, again, never seen a better time to be in precious metals than right now. And it really is looked at as this safe haven hedge when the dollar is devaluing, when there's stock market volatility, when there's geopolitical conflict across the globe. All of these things point to gold and silver as being the place that we want to be right now. Josh says, is there a penalty for moving your IRA out of stocks and into gold and silver? Great question, Josh. When can you access that gold and silver if it's in an IRA? So I'll cover this in detail as well here shortly, but when you move a retirement account into gold and silver, it's done tax-free and penalty-free. All we're doing is shifting what you're invested into inside that IRA. So right now you're in stocks or bonds, you want to move into gold and silver, there's no penalty, there's no taxation that takes place. We're just shifting the investment of what you're actually in that vehicle. You can access your retirement account after 59 and a half penalty free. You can start taking distributions. The same is true with gold and silver. After you're 59 and a half, you can pull gold and silver out, or you can liquidate and take cash out. You're going to pay taxes if it's a traditional IRA, but there's no penalty. And then what I would say about that is if you have an old 401k or an IRA that's from a previous employer, or your IRA is there, you don't have to be over 59 and a half to move that into gold and silver tax-free and penalty-free. So again, we'll take a look at your account with you. We'll make sure that it is eligible to be rolled over, but it is penalty-free to do that and no taxes for us to make that change. Kathleen says, why would you purchase one over the other, such as gold over silver? So we lean on gold for preservation and protection. It's very steady, stable, consistent, predictable. Typically, you're going to lean on gold for that anchor in the portfolio. Silver is very undervalued, very growth-oriented, So typically you lean on silver for growth. And most clients are going to do a mix of both, maybe a 60-40 split one way or the other. Great question, Kathleen. Again, that's what our account executives are going to dig into with you, is helping you understand your scenario and what metals are right for you and what allocation would be best. It's different for everybody, but that's kind of a general guideline. Monique says, what commissions do you take when you buy back? We have 0 fees on the buyback, Monique. So we're going to buy back at market value with 0 fees on that side. We really want to make that as simple and as easy as possible for you to get out of the dollar into gold and silver, then of course back into the dollar with no surprises there. And then Deborah says again, is it very expensive to liquidate in regards to fees? There's no fees. We have a 0 fee buyback. Our whole job is to make this simple and easy for you. So I'm gonna move on. That was a good amount of questions. As you guys have more questions, please continue putting them in the chat. I want to be able to kind of address those or have our account executives address them. But that was a great list. I appreciate you guys engaging there. And as we kind of go forward here, I really want to help you understand where gold and silver are headed, because that's obviously a big part of this. If we're concerned about the economy, we see that there's risk everywhere we look. How do we know that gold and silver is actually the place that we want to be? So where is gold headed? I'm going to put it very simply for you. In times of economic uncertainty, investors flock to gold. That's just the general sentiment and what we see as the trend. When the dollar is losing value, precious metals increase in value. They're inversely related to the dollar. So gold right now is being bought up in record levels by central banks. When traditional markets are choppy, investors move into gold. And we see that not only on the retail side, retail being you and I, just individual investors, but we also see it on the institutional side. These are big banks, big money, sovereign wealth funds, hedge funds. They're all moving into gold as well. They're leaving that traditional system. We've seen a tremendous amount of inflows into precious metals this year so far. And this gold rally that we've seen, again, it's up about 30% so far this year. It really should give you as an investor confidence that you're looking in the right direction. Gold's up about 30%, but during the last bull run, it really was fairly typical to see years where gold would grow 130% or more. So we're not even there yet. This is just the very beginning stages of what we typically see. In a basket of currencies, gold is actually now the #2 world reserve currency, just behind the dollar. So gold has just been taking over this positioning in that basket of world reserve currencies, where the dollar has always been #1, but it's losing and gold is quickly starting to take over, climbing that ladder. So again, that should give us a lot of confidence that gold is moving in the right direction here. Goldman Sachs, one of the most prestigious investment banks in the world, again, sees gold at $4,500 an ounce. JP Morgan Chase and UBS are talking about $4,700 an ounce on gold just by the end of this year. Now you have to ask yourself, how bad do they see things getting to make this kind of a prediction on gold prices? JP Morgan also said $6,000 an ounce gold could be a possibility next year if even a minuscule shift happens away from U.S. assets. If just 0.5% of U.S. assets held by foreign investors started moving into gold away from the U.S. dollar, we could see gold at $6,000 an ounce by mid next year. This is coming from JP Morgan Chase. So huge prediction there. Now, central banks have continued to accumulate about double the annual average of the last decade. So they've always been buying gold, but the annual average is double right now than what it's been for the last 10 years. And they're doing this to prepare for a world where the US dollar is no longer that premier currency. This is huge. So I really want to drive that home. You're not late. You're actually pretty early if you're looking at gold and silver right now. And on that note, let's talk about silver. So silver is actually relatively inexpensive. We look to silver for growth typically in our portfolios, where gold is primarily stability. Even though it does have great growth, it's more that stable investment. Silver is going to be a lot more volatile, but you can have huge growth swings on the silver side. And we usually, kind of liken it to wealth insurance for silver because it's inexpensive. If you want real wealth, you buy gold and silver. If you want inexpensive insurance on your wealth, you buy silver. Silver has broken a 15-year high earlier this summer. It's actually just starting to wake up and move, which is huge. That level is about $36. We've already seen it almost hit 40. So we're really beginning to see silver wake up. Again, gold has been steadily climbing in recent months, but history shows us that silver tends to move later than gold, but it moves faster, it makes bigger moves. And once we see it waking up, that's when you can expect to see those huge moves out of the silver side. So silver is facing potentially a big breakout year this year. And I'll give you a quote here. Phil Carr, who's GSC's head of trading, he says, every major bull run in gold is followed by an even greater exponential surge in silver. We saw it in 2011, we saw it in the 1970s, and we're on the cusp of seeing it again in 2025. So this is coming from major hedge funds, major investment firms that are looking at how silver and gold are performing and saying silver's breakout year is here. It's just a matter of time. Silver is still trading really at just a fraction of its all-time high. That previous level for silver is about $55 an ounce, but in inflation-adjusted terms, silver would actually need to hit about $75 to match its 1980 peak and nearly $100 to rival the momentum that we saw back in 2011, which was the last major bull run for gold and silver. So silver is doing very well. It's just starting to wake up, but it is incredibly undervalued compared to what we've seen in the past. There's this ratio between gold and silver of about 100 to 1 right now, meaning that it takes 100 ounces of silver to equal that same price as 1 ounce of gold. Give or take, we're pretty close to that. And that gold to silver ratio has only ever been this inexpensive 2 other times in its history. Both of those times were in the previous bull runs for gold and silver did break that $55 an ounce mark within a relatively small amount of time. So really the only other time in 30 years when the balance was so out of whack was during the initial COVID panic that we saw back in March of 2020, and it reached 113 on that ratio. And in the 12 months following that episode, silver rose by about 73%, while gold rose just 8%. So that's the kind of performance you can get. So all eyes really are on silver right now. And the last thing I'll say about silver, just to give you that confidence, again, if you feel you've missed the boat on gold because it's so high, I would try to encourage you that that's not the case. But if you still feel that way, look to silver. Silver is both a monetary and an industrial metal. In fact, 80% of the usage of silver is going to industry, right? Electric vehicles, solar, robotics, 5G, space race, AI, all that infrastructure that's coming into our country is using more and more silver. And so we're using about 250 million more ounces per year than what we're able to pull out of the ground. We're eating into that above ground supply of silver. We've been doing that for the last 5 years in a row. And again, that deficit is expected to grow. So when you weigh supply versus demand, it's just far outweighed on the demand side. We can't meet that supply need. And so at the end of the day, silver is so poised to grow. You have many economists that are saying silver is going to be one of the best investments you can make in the next decade. So I hope that kind of drives it home for you guys. Now, what's really important, and obviously why you guys are here, is to learn about how do you actually invest into gold and silver. We've spent a good amount of time covering the whys, but the way that it works here is we help our clients in 2 ways with precious metals. So there's clients that have cash in the bank or a brokerage account. We call that the cash side, right? Because it's not inside of a qualified retirement account. So anything outside of IRAs is considered cash. With that, it's really straightforward. We have this consultation with you. We build out a 7-digit client ID that's unique to every client. We get you payment instructions. You would do a wire transfer or a check over to American Hartford Gold with the amount that you want to invest. And again, we'll help you discover what that is, help you get comfortable with that number. But you send the funds in and fund to your account, and then we do that full consultation with you. We're going to help you select the metals that you want, build out a portfolio, really spend time getting to know what's important to you and putting together a portfolio that fits your needs. We then can ship that gold and silver right to your home if it's done as a cash purchase. So we'll ship it to your door. It's fully insured. We cover the shipping cost. There's no sales tax. We ship via FedEx. It's in an unmarked package. You will sign for it upon delivery. So there is no liability whatsoever on our client side until you sign for that package and have it in your hand. At that point in time, you own it. Up until that point in time, we have full insurance on it. We've shipped billions of dollars worth of gold and silver around the country this way. It's very safe and secure. And again, nothing says gold or silver on the package, so nobody knows what you're getting. It's just this private transaction. Now, at any point in time, if you want to sell that gold and silver back to us, we can send you a FedEx label. You box up the metals that you want to send back. We'll have FedEx pick them up, and then we wire funds into your account. It's very straightforward, zero fees on that side. The thing that I would drive home to you, if you don't feel comfortable having gold and silver on hand at your home, we can ship that gold and silver to a private depository. There's major vaults across the country that are all fully insured, backed by Lloyd's of London, up to $1 billion per account holder. You can have your gold and silver stored in those depositories, and we can set that up for you. We typically find that most people want to have the gold and silver in hand. It just helps them sleep easier at night. So just buy a safe, put it in your closet, don't tell anybody you have it, and have that gold and silver right at your fingertips, or store it in a private depository, and we can talk to you about what those fees look like as well for having it stored. So that's the cash side. Our whole job is to make that as simple and as easy as possible. So if you're sitting here today, you have some cash in the bank, you don't know what to do with it, you know that the dollar is losing value, you're concerned about it, or you're in all stocks and equities, and you feel like that's just not the place that you want to be right now, call that number again, 866-607-2447. Our account executives will jump on with you and help you figure out how to make that investment. It's very straightforward. The other side that we help our clients with is retirement accounts. So again, most of our clients have the majority of their net worth tied up in old 401ks or IRAs. They're very concerned about the future of their investments. This is their life savings. They're fully exposed to stocks in a 401k or bonds, which are showing us they're not that safe haven place to be. You can actually put physical, tangible gold and silver into a retirement account. So if you're over 59 and a half and it's a current 401k or employer-sponsored plan, you can move those funds out no problem. If you're under 59 and a half and it's a current 401k, sometimes those funds can be moved. Sometimes a company will keep that restricted. You just have to talk to us and we'll figure that out with you. We have a whole dedicated department that can talk to you about how to move those funds. Now, again, I mentioned before, if you have an old retirement account from an employer, so an old 401k, 457, pension plan, whatever it may be, even if you're not over 59 and a half, almost 100% of the time, those accounts can be moved over into gold and silver. Or if it's just an IRA, Roth or traditional, that can be moved over as well, regardless of age. It's always going to be tax-free and penalty-free. So we'll talk to you about that. We'll make sure we'll assess it and make sure that it's all going to be a smooth transition for you. We have a back office dedicated to that. But the way that it works is we open up what's called a self-directed IRA. So this allows you to hold on to physical, tangible assets in your retirement account rather than just paper and dollar-based assets. So this self-directed IRA is at a great company that we've worked with. They're the oldest self-directed IRA firm in the US, been long established. It's just a quick application. It takes us about 3 minutes with you. We ask you a few questions. We send that application over to you via DocuSign. You sign it right through your email on your computer. We'll walk you through that. If you're technically illiterate or having a hard time with that, we can either send a paper copy to you or just walk you through what that looks like, but it's very straightforward. Once that application is signed, we will set up a custodial call where, again, our back office will call over you to your current custodian that's holding onto those funds. We'll help you get the transfer form submitted. We'll liquidate the funds. We'll keep our thumb on the process the entire time until that account rolls over into the new self-directed IRA, again, tax-free and penalty-free. When that account funds, we go through that full consultation. You'll talk to one of our dedicated IRA directors that'll build out that portfolio with you, help you select the metals, and then we ship that gold and silver to a private depository. So I really want to drive this home. It's a third-party vault. It's not ours. It's a fully vetted, fully insured company that's specializing in storing precious metals. It's outside of the banking institution. So you can get your money outside of this banking system if you're concerned about that. It's being stored at this private third-party vault. Again, they're backed by Lloyd's of London on insurance up to $1 billion per account holder. So it's actually more insured than what you would get in a bank account. And then we ship that gold and silver to that private depository. It's about $225 to $275 a year, depending on which storage option you pick. And we'll cover that with you as well. We will always cover the account setup and the first year of storage for you, and then $225 per year after that. And again, at any point in time, if you want to liquidate the metals in your account, you want to change what you're invested into, we can help you do that penalty-free and certainly fee-free as well. So very straightforward on that. But that's the two ways that we help our clients. Cash side, retirement side. If you're considering one or the other or both, call our client acquisition team here, our account executives that are standing by. It's 866-607-2447, and they're going to walk you through the specifics of your scenario and your situation. The last thing that I want to kind of really touch on here, guys, is why American Hartford Gold. Obviously, if you're considering investing into precious metals, this is probably the most important part, is are you with the right company? Now, American Hartford Gold, we're the largest precious metals dealer in the U.S. We've shipped over $3.5 billion worth of gold and silver to clients just like you and I over just the last couple of years. So we've been in business over a decade. We have thousands of positive reviews, A+ rating with the Better Business Bureau. And Inc. 5000 magazine has given us accolades for the last 5 years in a row as one of the fastest growing companies in America as far as precious metals go, financial services. We're ranked by them. So these are all third-party accolades that are really important that you get to know as well. And I'd really encourage you to visit our About Us page, watch our welcome video. You can see our president, our CEO, our account executives, our directors, the inner workings of our operation, and know that you're working with a very good company. And that About Us page will have links to our reviews, our accolades. Again, you can just really get a good sense of who we are as a firm. I don't see any other gold company pulling back the veil like we've done here to show you who we are and what we're about. And I think that's just very important. So you want to know what company you're partnering with here. The last thing I would say is we have a full service team that's dedicated to making this a smooth and easy transition for you, both into gold and silver and out of gold and silver. And we do have this amazing promotion that I told you guys I'd run through with you, where you can get up to $15,000 of free silver on your first investment with precious metals. Again, it's our thank you to taking that first step to investing into gold and silver with American Hartford. And the way that it works, and if you talk to our account executives, they're going to explain this in more detail, but for every $50,000 you invest into precious metals, we're going to give you $500 of free silver, up to $15,000. So a portfolio of 1.5 million coming over into precious metals, that would qualify for that full promotion. But even if you're not at that level, every $50,000 increment gets you $500 of free silver. And whether it's a retirement account or a cash investment, that free silver gets shipped right to your home so you can have that on hand. So huge promotion there. We also have a free safe promotion that we're running. So it's kind of an either or, but we can get you a free safe that we would send to your home if you don't have a safe currently. Again, talk to our account executives and our specialists about that. They'll walk you through the different promotions that we have. We want to make sure that we're giving a thank you to our clients for taking this really big move to protect their investments. So we've covered a lot of detail here, guys. I'm just going to look at these questions one more time before I close up. Ophelia asks, how would it work if we went back to the gold standard? That's probably something we should save for more of an in-depth conversation if you call us. I don't know that we will quite go back onto a gold standard like we've seen in the past, but ultimately what we would expect is gold to go significantly higher. You think about all the money that they would have to tie to gold, that would need to raise that price per ounce on gold. So it would be a great move to be in gold and silver ahead of time. No tax on buying gold, Monique. So yeah, no sales tax whatsoever. Whether that's cash investment or a retirement account, it's sales tax free. And then what happens when the U.S. changes to digital currency? So, Faith, that's what a lot of our clients are concerned about. If you're worried about the U.S. going to this digital currency and losing the value of the dollar, you want to protect your net worth ahead of that transition, because who knows what that conversion rate's going to be. Get into gold and silver, which is really meant to protect and preserve your net worth, right? And then, of course, you want privacy. You don't want to have everything you have tracked and controlled if the government goes that direction. Gold and silver is the perfect solution for that. And then Thomas says, it seems like you're pushing silver. What do you suggest to purchase? Thomas, great question. I'm pushing both gold and silver. I think both are in an incredible environment right now, but certainly silver is in a very, very good position for growth. So call that number in the chat and talk with our account executives, and they'll work you through what assets to purchase and what that looks like for you, okay? To wrap this up, guys, we've gone a little bit long here. I always appreciate your time with me. Really glad to be able to provide education, and I hope it's been useful for you. I just want to leave you with the last 12 months. Again, gold is up 48%. Silver's up 30%. The S&P 500 is up about 8%. The NASDAQ is up about 6%. So gold and silver are far outperforming just over the last 12 months. If we look back the last 25 years, so since 2000, gold is up 1,050%. Silver's up 428%. The S&P 500 is up about 244%. The NASDAQ is up about 366%. So it's not just this short-term trend that we're seeing. If you expand over the last 25 years, gold and silver are still outperforming. A lot of clients just haven't really considered gold and silver in the past because we look at that in times of volatility. It's once every decade or so. But in reality, gold and silver have been consistently outperforming, just doing incredibly well, even as you expand backwards. So that's very important to realize, and you have to ask yourself, where do you really want to be? When you look at your investments, is it stocks and the dollar, or is it precious metals? Wise investing is really just about risk management, right? Gold is far outperforming the markets, and there seems to be nothing but risk on the horizon with uncertainty accompanying it. The dollar is plummeting. The US is moving into a recession, very likely. Countries are moving out of bonds and US treasuries, and they're moving into gold. So follow what countries and banks are doing. There's a reason that all major financial institutions are leaning on precious metals in this season. Central banks, billionaires, and history are telling us that gold and silver are the place to be right now. The bond market, equities, currency markets, they're all far too volatile right now for most of our clients' retirement portfolios, and you're looking for that stability. Gold and silver are the perfect place to be. And then what's really important to realize as well is that America this year has imported over 600 tons of gold. Why is that? It was in the first 2 months of 2025. Central banks have bought more than 1,062 tons last year. They're setting records on their gold buying. Why are central banks moving out of fiat into gold? What's going on there? Banks haven't moved this aggressively on gold since the 1950s. That should tell us something. President Trump at the start of the year tweeted the golden rule: he who has the gold makes the rules. Scott Bessent, the Secretary of Treasury, has come out and he said, gold is my #1 holding in my portfolio. I think that every American should have it. It's going to do very well. And then, of course, investment banks are saying, do what central banks are doing, buy gold. And so if the policymakers are dropping these hints, we really ought to pay attention. And so I would just impress upon you, if every sign that we're seeing is saying go to gold and silver, and then we look at gold and silver and they're outperforming every other asset class, and we look at every other investment opportunity and there's risk, there's uncertainty, there's volatility. Do we want stability and growth? Do we want uncertainty? There's never been a better time than right now to move into precious metals. So I really hope I've been able to give you guys some education here and give you a sense of how this works and why it's so crucial. So take a moment as we jump off here, call our account executives. You've made it this far, you're interested clearly. Just have a conversation and see if it makes sense to move a portion of your portfolio into gold and silver to give you that peace of mind and hopefully help you sleep a little easier at night as we go into these unknown conditions. So call us at 866-607-2447. I'm Machi Block with American Hartford Gold. It's a pleasure connecting with you guys. I can't wait to work with you, hear your stories about investing, and see how we can help you out. Thank you for joining us today. And make sure you call that number, 866-607-2447, and jump on with one of our account executives right now. They'll get you set up with a director to get your situation taken care of.